So here's another thing I want to think through, because I don't really know the answer to this. Humans are humans, and we're going to create leverage. And we talked about the monetization or the financialization of assets. And we see it at retail levels. You talked about this 20x, 100x. But we're going to see it at scale again, because that's what humans do. Is that going to change some of the properties of what this looks like in the future? Are we going to introduce some of the risks and some of the downs that it's not really there in this marketplace now?
I think that the number one critique right now of Bitcoin is it's volatile, but I don't think it's volatile because it's digital property, digital energy, or because of all of the constructive uses of it. I think it's volatile because there's too much leverage in the offshore crypto exchanges and the altcoins. I think that what's happening is someone buys an altcoin with a 10x lever, it moves up 20%. They cross-collateralize into the second altcoin, and then they somehow collateralize that, or they tie that into Bitcoin. I think that 20x and 100x leverage in the offshore crypto exchanges has been driving the volatility in Bitcoin. And I think that as we come off of that, I think that we're not going to see 20x leverage. Coinbase doesn't offer 20x leverage.
No, but the investment banks will. Because they can't help themselves, because that's where they see money is, I'm going to give a bigger financial player, a hedge fund, for example, this kind of leverage.
Well, I mean, like we just saw the equity swap issue with Archegos play out. But I can tell you that I've traded with all the wirehouses for 30 years with hundreds of millions of dollars. They never offered me an equity swap. Okay, it's not very common to be able to get an equity swap, even if you have a $500 million portfolio. Everybody I know, they're not trading with equity swaps. The highest amount of equity or the highest amount of leverage you see in conventional markets is like 50% or 2x leverage. And so I'm not really concerned about that. The future of Bitcoin is transitioning into the public markets and the institutional investment markets where the leverage is normally going to be 2x. Or less. And I think that it'll be delevered more than it'll be levered. I think that if you look at the velocity of the crypto markets, people are taking 10x and 20x trades, and those things are being marked to market every minute of the day on the weekend with forced liquidation. The reason you get volatility is when you put 10x or 20x through something that's got. If I have a $2 billion market cap and $30 million of this stuff is trading, and I lean on it with 20x leverage against something else, then I'll move that number. If I'm cross-collateralized and I'm able to go back and plug that into Bitcoin, you'll actually drive some Bitcoin volatility. But, the volatility is coming from the crypto markets. It's not coming from conventional users of digital property or traditional institutions. Yeah, I think the conclusion is, look, if you look at where Gensler is going, and where the regulators are going, they're going to regulate the stable coins. They're going to regulate the DeFi exchanges like Uniswap. They're going to put more regulation on the offshore crypto exchanges. As they're going to put more regulation on the onshore exchanges. And as they do that, one of the consequences is leverage is going to get taken out of the system. The obscene amounts of leverage comes from, DeFi combined with offshore 20x, right? And if you go onshore, it's kind of hard to generate a 200x leverage play. In fact, as I said before. So, you remember what happened when BitMEX went offline?
Yeah.
When they brought charge against Bit, I was trading in the market, Raoul, and so like looking at it every minute of the day, like I very, very trading in it, like having the skin flayed off your back if you saw something go wrong. Like I watched Bitcoin go from 9,500 a coin to 10,500 a coin in 3 minutes. When BitMEX went offline, I watched half the velocity disappear. Sorry, half the volatility disappeared. Like you could literally see like the volume got cut in half and the volatility came way in. And so I think that you're seeing progressive waves of normalization as these markets get less levered, and I think that that's going to continue over time. I don't know that it will end tomorrow, but obviously my long-term thesis is you look out 2, 3, 4, 5 years as more and more large institutions hold this with less and less leverage, the volatility on Bitcoin decreases.
A final question I want to think about is, okay, let's go out 10 years now and just think about, okay, there's this kind of digital asset world with DeFi and everything else. Where's Bitcoin's role in that as the apex predator? What does that mean? Does it mean all DeFi is on Bitcoin, or it's a broadly spread digital asset world with this new technology and Bitcoin is the kind of base layer collateral of the entire thing? How do you think about that?
I think that Bitcoin is the most decentralized digital property, right? It's the highest quality digital property. We want to create a digital property running on a decentralized network that's owned by everyone and no one. We can't have, no one can shut it down. You can't have people upgrading it every quarter or every 6 months. You can't have a CEO of it. You can't have a CTO of it. You can't, you need to have something completely decentralized. Once you've got that, now the velocity of the digital property, and again, when you call it digital energy, you start to see it differently. There's going to be a battle to see which cryptos are truly property versus which ones are security. And Gensler has said that on no less than 4 different occasions. He thinks many of these cryptos are security. So as we start to see more guidance there, he's also said some tokens are commodities. Like, you need digital energy to exist in order to move it at the speed of light 100,000 times an hour across 100 jurisdictions in order to do yield farming. So you need digital energy, and Bitcoin is. You need one. Do you need 2? Not necessarily. You need one digital token that you can move at the speed of light 1 million times a second. If I've got that, JP Morgan can get in this space. Coinbase can get in this space. Square can get in this space. Square's a bank. There's this Coinbase wants to have a lend product that has yield. The SEC says that's a security. They can't offer it. Okay, well, they didn't say you can't offer it. They said you actually have to register